money tip. Strength for freedom. Bit by bit. Joe and Megan on your side. Yeah. Visit my fully funded life. Yeah. Visit my fully funded life. Money tip.
Well, welcome to the Monday Money Tip podcast presented by Fully Funded Life. My name is Joe Sangle, and I'm joined by my co-host in studio today, Megan Hibbard. Welcome back to South Carolina.
I know. It feels good to be back.
You're in the new offices,
Yes.
the global, international, regional headquarters of Fully Funded
Yes.
Life. So
Yep.
you live in North Carolina. Before we dive into the topic of the day, give a quick update of life in NC. How is it different than SC?
I like North Carolina. I miss South Carolina. I miss parts of it. But North Carolina's home.
Yep.
So I'm near my family, which is nice. I get to see them and have family dinners and do all the things. And 2 of our boys are playing baseball. So we're like full in baseball season and we're at the end of the year. And I feel like the end of the school year is like Christmas time times 2. Like it's like so.
On busyness.
Yeah.
Oh, yeah. Yeah. Are you missing a baseball game by being here today?
I am.
I bet you are. I'm sorry.
It's okay.
It's when he's going to get his first home run.
Well, it's my 4-year-old.
Oh, okay.
And so that is like pure chaos.
It is pure chaos.
You need humor.
I'll never forget my firstborn, and I know a lot of people listening went to their first kids' sporting event. They were 4 or 5. Man, when Malia went to I think it was soccer was the first thing she played. And I had these expectations, being the youngest of 6. I never knew what it was like to be around people that were learning the game or had no clue of the game.
Yeah.
And I was like, these kids are terrible at this.
Oh, yeah.
And because my expectation was here. Now with my second 2, I like knew to expect that. And it's actually quite humorous. It's,
Yeah.
2 kids over here picking grass, another one's kicking the pole to the goalpost. Yeah.
Yeah. So Jordan, my husband, is coaching.
Oh, he's the coach.
He's assistant coach on both of the teams.
Ooh.
So we have a 4U, and then our oldest is playing 8U, which is like legit.
Yeah.
They're like in baseball, like they are like the bats have to be a certain.
Mhm.
That's all the rules. And Jordan's like, these are very, very different.
Yes.
It's hard to go from one to the
Well,
other.
good for Jordan for volunteering.
Yeah.
That's awesome. Well, tell everybody what we're going to talk about today.
Yes. So today, if you've been with us for any amount of time, usually around this time in the spring, Joe releases his investment update. So today we're going to be giving you guys a snapshot into that and kind of focusing on this episode in particular is going to focus on looking back. So back at what happened last year and how that affects your investment update moving forward. So we'll give you the look back. And then if you're interested in the what to expect for the year to come, we'll kind of tell you how you can check that out too. So be a good episode.
Yes. It was interesting going through this process because I haven't really measured how far back I've done this, but I have done this probably 15 years.
It's been a while, yeah.
And the reason it started is I felt like it was a really good process of holding my own self accountable to saying, what did I not know that I should have known? What did I know that I was like hesitant to say publicly? That sort of thing. But also to prove to myself that this stuff is really hard. It's hard to anticipate the global economy, the national economy, and what will happen.
Yeah.
So it was a lot of fun.
Yep. So the main thing we're going to do today is look back. So why would you say reviewing last year even matters?
Well, I think for our listeners, for our participants and members of Fully Funded Life, it is, it's a way of holding ourselves accountable and saying, here's what we did say last year. Here's what was right. Here's why we got that right. Here's what was close, but not quite. So we call it, it's like playing Battleship, miss. It doesn't matter that it was one away.
Yeah.
You try to say it, it's just a miss. But I changed it to a close miss. You would never say that to your opponent in Battleship, if anybody knows what I'm talking about. But I think it's very important for our members to hear our thought process as a team of Fully Funded Life, and for them to recognize that Joe is not always right. I don't purport to be always right, and this is just a way of proving them. I'm not always right, and it's why the verse, Proverbs 15:22, that says, with a multitude of counsel and abundance of counsel, plan to succeed. You can't just have one money coach in your life. You need an abundance of it.
That's good. So why do you feel like it helps people think more clearly about investing?
Well, I would hope
Yeah.
over these 15 or so years of doing this that I have become more educated in the world of investing. More, I don't know if it's more sophisticated, but definitely more educated.
Yeah.
And I should be able to deliver better information, more details about why I'm thinking such. And in the process that I'm hoping that our Fully Funded Life members are on that same journey of learning, that they are, I really want our members to not be the person that gets the envelope of their investments and it never gets open, and it's the quarterly update, it's the annual update, and it just goes in the pile and they never open it and they don't ever look at it. Or they open it and they're like, I don't know what this means. It went up, great, or it went down. I need to fire these people. I really want Fully Funded Life members to be informed about all the aspects of money, including investing. It's very, very important that we don't just, quote, set it and forget it. I think it's better to say set it, check it, make adjustments if necessary, then you can forget it.
Yeah.
Until next year when the investment update for the next year shows up.
Happens again. Okay, so let's think through what you got right last year. So what were some assumptions that played out? What would you say for things you got right? Because you didn't get it all wrong.
I didn't get it all wrong. I was pumped that I was not 0 for. The number one that I thought was too easy is that residential real estate prices would continue to moderate with little to no rise or increase in the median sales price. And that has borne out to be true. I really feel that in 2020 through 2023, maybe early in 24, that we got like 10 to 15 years of price increase in a 3-year period. And like you saw that, you and Jordan saw that.
Yeah.
So tell a little bit about, like, that's part of what informs my view of this, right? What year was it? Like you bought and sold you sold 2 houses and bought 2 houses, and then yes. And tell the timing of that.
Yeah, so we sold in 2020 our first house.
Before prices went nuts and while interest rates were still low.
I literally thought my husband was crazy because he was like, I think this is a time to put our house in the market and buy a new one. And I was like, it was August. Like, I was like, we're in
a pandemic.
Yeah, like why would we do that? And thankfully I genuinely and wholeheartedly trust him and his opinion and his thoughts, and he's very wise. And I was like, okay, we're gonna take a step. And so we sold that house and definitely made money on it, because when he bought it, I mean, his first house when he bought it, it was like $99,000.
Yeah.
Like, which was crazy.
Welcome to South Carolina.
Right,
15 years ago.
Right. And so we sold that house and we bought like our upgraded house and the next level, because our family was
more
growing.
Space. Barkley got to run outside more.
Yeah. And then we went from having 1 kid to having 3. We needed the more space. And then 2022, we decided to move to North Carolina. No, what year are we in? 2026. So 2024. I was like, the years blur together when you have kids. I'm like, what year is it? So we sold our house here and we bought in North Carolina.
So around 3 years difference.
Right.
Yeah.
Made a significant amount on our house.
You don't have to say the dollar amount, but what would you say the percentage increase was on the house? Versus when you bought it 3 years earlier?
10-15%.
Okay.
Maybe more. But the wild thing is, from when, even like we're seeing it even now. So even when we built a house in North Carolina, like in a neighborhood, we did like a semi-custom. Like,
kind of a pick a plan, but you can make some adjustments.
You pick a plan and you pick like groupings of things.
Okay.
So I want this group of this flooring and this tile and this color, which is what my heart needed, because in a lot of situations where it's like, you can pick anything that you want, I'm like,
yeah, it's overwhelming.
I'm like, I don't need that. But from the time that we bought our house and we signed all the papers to even like before we moved in, our house had gone up in value. To even now, we just discovered that our town is getting a Target, and it's like a mile and a half from our house. And so like that is like boomed, it's booming out. And so even from the time that we picked our lot out and bought, our house has gone way up in value. Which is
Amazing.
wild.
So you're in what's known as the RTP, the Research Triangle Park. And so Raleigh, Durham, that whole big area, that complex, that I-95 complex that tons of people move to, beautiful area of the country. And so that's why I make this call, because the prices not only went way up, but interest rates went way up. 2.5% interest was not uncommon. And all of a sudden it was like, if I could get 7%, that would be pretty good.
Yeah.
And you can't have that and continue to see prices going up, because people have a limited amount of money.
Yeah.
And so that's why I made that. Another assumption that I made was that housing price, that precious metals would grow, that precious metal prices would grow. And now they grew way more than I thought.
So you love your precious metals.
Ooh, I like them because they're pretty. I really do. I think they're awesome. You've gotten an oxen award or two. How many have you gotten?
I think I have 3.
I think the team around here needs to know, if you've been around Fully Funded Life at all, you know that I wrote a book called Oxen, and it's right behind me, I guess. And it's about investing. And our team here, when they do something really awesome, it's a way of rewarding good work or a good decision. I hand out an oxen award, and it's 1 ounce of pure silver with an ox on it. And it's really minted by, I think, the Australian Mint to celebrate the Chinese New Year in the Year of the Ox. So I buy them during the Year of the Ox and I hand them out. And I don't think anybody on our team throws them away.
Oh no.
Right?
Why would you
Like
throw it away?
it's a chunk.
Yeah.
It's cool.
I have to hide them from my kids.
Yeah, you have to hide them
They
from
think
your
they're
kids.
so cool, and I'm like, you cannot. This is not something you play with. Like,
No, let them play with it. Let them tarnish it a little bit. But I thought gold would grow a little, 5%, because it had grown a lot, and that silver would grow by 15%. But I was off. It went up a lot, like over 100%. So I feel like that in times of great uncertainty, in times of war, in times of economic challenges, in times of high interest rates, people, not everybody, but there's a large chunk of people. They're a minority of people relative to the population, but it's a large enough group. They start hoarding precious metals, and that demand would drive that. Had no idea that all of China would be buying huge quantities of gold and silver. Huge quantities of people in the United States would jump into buying gold and silver because of what they view as the deflation of the American dollar. And so got it right. Wish I'd bought more when it was $14 an ounce.
Do you have any, from wrapping up what you got right, do you have any quick takeaways from getting those right? Or
I think the takeaway is, while I was right on gold and silver going up, like, you just never know the world events that could happen. And I always think it's interesting that when people are pondering a major decision, they tend to run to all the things that could go wrong. Okay. Like you and Jordan buying a house during the peak of COVID, right? 6 months after it hit. I'm sure you're running to everybody in the world could lose their job. We could have zero income, and we're increasing, how much we've bought in-house. This could be a catastrophe. We all think of that. Yeah. But what we tend to discount a lot is what could go well. Yeah. What could go right. And it's the thing that I think we miss when we think about all the horrible events is that if you and Jordan had went broke, like, cause the world went broke, the rest of the world went broke about a year, 2 years before you did. Yeah. Right. And you would start making new decisions based on that. And so, that's what I always like to tell people is, hey, you may be able to anticipate a trend, but it's hard to name a number. Yeah. Trends are easier to identify than numbers, for sure.
Yeah.
That's a lesson I've learned.
I feel like everyone's made adjustments in this last year, just in general.
Yeah.
From inflation going so high, or, my husband will come back and he does a lot of our grocery shopping, just the way that works out. Super thankful for. But he'll come back and be like, well, spent record number at the grocery store this week. Like, it's just like things are so expensive all around that I feel like regardless of pandemic or no pandemic or world events, it's good to constantly make those adjustments.
I think I hear a new segment of the podcast coming up called Jordan Shops.
We should have him on. He's amazing.
I love it.
I just love him.
That's great. I'm glad you do. That's great news. All right, let's talk about what I got wrong. This will be a 1-minute segment.
Yes, short and sweet. But I mean, you're like trying to predict the future. Like, and I think the fact that you get all those things right is pretty remarkable.
It's a challenge.
And you would expect to get a few wrong because you're trying to predict the future. Yeah.
So tell me what I got wrong.
Yep. So maybe you said interest rates would remain stable with no cuts or maybe one cut.
Yeah. They ended up cutting it, I believe, 3 times. I don't know why. Inflation still is sticky. And if you lower the cost of capital, people are going to buy more. And that's exactly what has happened. And so inflation has remained hot. That's a big deal.
Yeah.
Yeah.
All right. The next one, the stock market would grow by 10%.
Yeah. That I felt like, that would be the case, but it ended up being really at the 10-month mark. I was going to be so far off and such a swing and a miss. It was going to be double that. Stunningly so. But then crazy things happen, and that's what happens because I'm measuring 1 year to 1 year. I hold myself accountable to the 1 year to the 1 year because I don't want to cherry pick a certain time so that it appears that I'm right. But it had declined and lost about half of the gains it had made in the previous 10 months. In 2 months, it gave back half of that. And I think the lesson learned there is that the market's investing is very, very, very turbulent month to month within a year. And that's why I have this 5-year rule. Fully funded life members who've been through the Rung 6 course and Rung 8 course know that of my 5-year rule, that I will not have money that I think I need in the next 5 years invested. Because if I had Keaton's college money, his first 2 years of college money is in the 5-year window because he's a sophomore in high school. If that money went down that much in 2 months, that would cause challenges to my sleeping, and I'd be so frustrated with myself. But guess what? It just that money that is set aside in safe mode just kept creeping up. It's 3 or 4% a year, and I don't have to worry about that. And so that's the lessons that I learned from that one. And then of course we've talked about the gold one, the silver one. Had no idea the incredible surge that would happen. And I watched this show, Alaskan Gold Rush. Okay. I've watched it for 15, 20 years maybe. There's this little young teenager named Parker Schnabel. If you've ever watched it, his grandfather was like 85 when it first started. Okay. And had a gold mine, and a small gold mine, and Parker was his shadow. I mean, just always with him, loved it, wanted to skip school all the time. I mean, he's 13 operating huge, heavy equipment. And at his high school graduation, Grandpa put, I think it was 100 ounces of gold in front of him and said, you can go to college or you can use this to start your gold mining adventure. And Parker's like, I'm going to the Yukon. And I remember this happening because I saw that jar of gold and I was like, I would do nothing. Can I choose nothing and just take it? It'd be awesome. But
that's not an option.
This year, I watched this show. It's one of the shows I watched with Jenny. He just had a $40 million season. 40 million. But it's a lot of work to get gold out of the ground. So there's a limited supply. And when you think about supply demand curves, huge demand for gold, huge demand for silver, limited supply, hard to turn on supply. Well, then that's going to drive prices way up more than what I thought would have happened. Wow. Silver has only experienced something like this like twice ever, and usually collapse right back down.
All right. So what would you say lessons you learned from being right?
I really feel no happiness or sadness about being right or wrong for real. Like the lessons that I learned are what were my data points that helped me determine this was right and continue to build on that for my future prognostications. If we flip it to what was wrong, hey, what did I not see that I should have seen? Like of any of the things that influence this, should I have been able to anticipate it? Again, because I do not make short-term investing decisions, it really doesn't matter to my investing strategy, unless I feel like it is a 5-year or longer term, and then I will make an adjustment. So just for all of our people that are watching this, what major investment decisions did I make because of it? None. I did not make any major tweak to my investment decisions based on my prognostications of what I got right or what I got wrong, because, well, I'm in the 5-year window. I am going to continue to invest in commercial real estate because I feel like that's different than residential. I feel like there is a demand for what I call mid-level, above like a single room type office and below 20,000 square foot office space. I think there's a really good mid-level office space that appeals to companies that have a lot of people working remotely but need that central area. And that's why we currently have ownership interest in 7 2,200, 2,400 square foot offices. Yeah.
So you might be listening to this and thinking, this is interesting, that's great, but why does this matter to me? Like, how does this affect me? So what do you feel like viewers can learn from looking back honestly?
Yeah, I really encourage every one of our listeners, have you taken the time annually to open the envelopes, to take those emails that you've got that says your investment update is now available because you went paperless, and actually looked at it and said, hey, what has happened to my actual investments? Where are my current investment dollars going? That money that's being withheld from your paycheck and put in your retirement account, or that money that you have zapped out of your bank account, put in your Roth IRA, and ask yourself the question, do you need to make adjustments? And I would encourage you, maybe you don't want to have a 5-year rule. Maybe you want to have a 3-year rule. That money that you might need in the next 3 years should be safe mode. Do you have the money that you might need in the next 3 years to do that home reno project, that big vacation, that big dream you're trying to fund? Do you have it in safe mode? And make the adjustments as needed. The one thing that I have found doesn't work too well is letting the oxen run freely over here in the pasture that you don't even know where it is all the time. And then you're hoping 30 years later, you're going to come back and it's nice and healthy. You should, with wise counsel, with an investment advisor, take an honest look at it. And I encourage it at a minimum to do so annually.
A lot of people, I mean, just to see this place where we're at in the world. You know, it's easy for headlines or emotions to get people to make a decision. Oh, I need to sell this, or I need to do this, or I'm afraid of this going to happen, so I'm going to do this. Like, why do you feel like investing based on headlines or emotions gets people in trouble?
Emotions are big liars.
They are very.
Emotions are horrible liars. I mean, listen, if we responded to all the thoughts that we had in a given day, we would destroy most of what we love most. We would. So, you know, when our spouse does that thing that kind of gets on your nerves a little bit, like my wife, if I put something on the counter, if it is there 3.1 milliseconds, she deems it as obsolete and it's either thrown away or filed away. And I come back and I'm like, where's it been? Now she will say it's been there for 2 weeks, but 2 weeks equals 3.1 milliseconds to me. So, you know, I don't always respond to that. And so what I just tell people is, if you see the market collapse, it's because people have money invested that shouldn't have never been invested in the first place. So they're panicking. It's retirees and all their money's invested. And they're like, oh my goodness, I got to sell. Well, here's what I've learned. Those that are selling in a panic type phase are doing the old fashioned practice of getting poor. It's called buying high and selling low. I've seen the same thing happen with silver. I have a friend who has a lot of silver, and he's like, oh, it's going to 150, it's going to 200. I'm holding on. This is unbelievable. And I'm like, wait a minute. It was $25 like 3 months ago. On what basis? I don't know why it's where it is right now.
Yeah.
And well, guess what? He still has a lot of silver. So that is the parting gift. He still has silver. I converted a bunch of mine to US dollars.
Yeah.
So emotions drive it, but I would strongly urge you when it comes to your investments, and your emotions are a negative influence.
Okay.
Yeah.
All right. So maybe people are saying, okay, I like this. I want to know where I can find out more, where you show what you're planning the next year.
Yeah. For the future.
Yeah.
So fullyfunded.life is our platform. The podcast is it's sponsored by Fully Funded Life. We want to help people live a fully funded life. And on that platform, we have a lot of investing courses. I think we have right now 21 unique courses about money. We have 4 or 5 challenges. One of them is a buy your first stock challenge. So I actually recorded my screen as I bought stock on all the different platforms and how I kind of evaluate which stock that I buy. But there's also the 2026 investment update, and you can press play. You can watch it all. I actually share all of the stocks I own, all the mutual funds I own, all the real estate I own, precious metals I own, crypto that I own, albeit a little bit. And I share that not from a dollar amount, but just to show what I do possess, because investing questions outpace any other question, budgeting questions, debt questions, 10 to 1. And so I provide it as a starting point for our Fully Funded Life members, because we really do want you to live a fully funded life. And a bonus benefit is every pro member gets access to included coaching, 30-minute Zoom sessions with our trusted coaches who will help you figure out where you are, where you want to be, what that fully funded life looks like, and will help you navigate the steps to get there.
Yeah.
And I just love that we are able to offer this to people.
Yeah, so we'll include a direct link so that you can learn more about his investment update and everything that's included in that. And then there's also on that page, there's a specific link that you can click that will give you a 14-day free trial. So you don't have to pay for the 14 days, and you can access Joe's investment update and kind of take a look around, see what you think. And then after that 14 days, you can jump in full steam ahead. So yeah.
So here's what I would ask everybody who's watching. Next year, should it be Joe's investment update and Jordan and Megan's investment update? Should they? Comment below. We would love to hear it. If the majority of people say yes, maybe Megan will give an update a year from now. Hey, thanks for watching the Monday Money Tip podcast. Go live your life fully funded and get fired up.